Hello traders and welcome back. This is the market opening preview on a Friday, the end of our trading week, August 29th, 2014. Traders, this is brought to you through FXCL Excellence in Trading. Alright traders, well, I'm coming to you very, very early this morning. It's sun's only been up maybe an hour, so looks like it might be a nice day today, but tell you the truth, I'm not quite sure. Got some clouds and a lot of wind out there, so we'll see what happens. But anyhow, as we are, let's move on. It is Friday, and for those of you in the United States, please enjoy your 3-day weekend. All right, moving across, let me briefly introduce myself to you. My name is William K. Gilday, and I am your moderator through the market opening preview series that's brought to you every single day before the London Open. Traders, I started trading in the year of 2006, and in 2008 I retired from a wonderful career in the fire rescue department out of the great state of Florida. Traders, my first career was awesome, and my second career is just as exciting and is awesome also. Traders, I trade the Forex market every single trading day. Doesn't mean I take a trade every day, but I'm in the markets watching charts, watching fundamentals, seeing what's going on around, and keeping an eye on things, hoping to make a little bit of profits. All right, let's get over to the risk disclaimer, take care of the legal stuff. Forex trading has a large potential rewards, but also a large potential risk. You must be aware of the risks and be willing to accept them in order to invest in the Forex markets. Traders, do not trade with money you cannot afford to lose. Remember, traders, that past performance of any trading system or methodology is not necessarily indicative of future results. Okay, time for news and commentary. Let's first start off with commentary. First thing you need to realize is, remember, it is Friday. What happens on Friday? Yes, you got it. Position squaring, profit taking. So we might see some pairs that have been trending in a certain direction actually turn around and trend in the opposite direction because of that situation where people are taking their profits and going to enjoy their weekend, especially the U.S. traders who have a 3-day weekend. So as far as trading yesterday went, I thought it was pretty sluggish. A lot of pairs didn't make any moves. There was only like 2 pairs. I do a forecast every day on 6 currency pairs that's sent out in a newsletter, and I have to tell you, traders, my trade plans yesterday, there's only like 2 of them that worked. The rest of them, it's not that they didn't work, they just never made it to entry. They never hit entry. So pretty interesting to see that. But yeah, everything is, there's a lot of pairs, as you'll see when we get to the charts, that are very sluggish. All right, let's take a look at what we have on the calendar today. There's a lot of medium impact that I'm going to talk about today. There's only one high impact. However, we do have German retail sales coming out today. I think that will be of some substance. You know, as I look down the calendar here, the big one is in the Eurozone. We have CPI year on year, and that is the one I only see as high impact is out of the Eurozone. Again, that is CPI year on year, and at the same time we have the Euro giving us core CPI year on year. And other than that, as we go down the move here, out of the U.S., we've got core price index month on month and year on year. That is medium impact. And GDP quarter on quarter, again, medium impact data. Could move the markets, but probably not. You know, it just depends. You know, it's going to be Friday. We'll see how it goes. Now, this has always been medium impact, and it amazes me. Every time this comes out, the market moves. And that is the Michigan Consumer Sentiment. It comes out today in the New York session, and the Michigan Consumer Expectations comes out. I never understood why they put that as medium impact when it is always moved the market, and it should really be a high impact data. Traders, that's all I see on that side as far as the calendar goes. Let's go take a look at the indices. Wow, I see a lot of red. The Dow 30 closed at 0.25%, and the S&P 500 closed at 0.17%, and the NASDAQ 100 closed at 0.17%. Going across the pond, wow, another bout of red. The DAX closed at negative 1.12%. The FTSE 100 closed at negative 0.36%, and the CAC 40 closed at negative 0.66%, along with the Euro stocks. 50 closed at negative 1.01%. Wow, really took a beating yesterday. Let's come over to my side of the world, where actually some of these are not open yet. I'm doing this very early today. So the Nikkei 225 is negative 0.20%, and they are open. The Shanghai is still closed at 0.62%. The Hang Seng is still closed at 0.71%. Those two will be opening at the top of the hour. And the S&P ASX 200 out of Sydney, Australia, is open, and they are just in the green at 0.09%. And the Kospi is open, and they are down at negative 0.48%. So that rounds up what's going on with news, indices, and my commentary. So I guess it's that time, isn't it? I think we should go over to some Forex charts. Remember, traders, these are 60-minute charts, and I will tell you in advance that when you look at some of these charts, you're going to say, like, there's nothing on them. I didn't have a lot to put on them. You'll see, as we explain why, there's just no price action. A lot of these pairs have been in a range, and they're not doing anything. So let's hit the first one, and that's going to be the euro dollar as usual. And you can see this has been in a range for like the last 15 hours, basically the middle of New York, and has done nothing. It's been in a range, and it's just floating around out there, and really hasn't made a decision. However, I don't want to buy the euro. You know, we've talked about this for a long time. I do not want to buy the euro, right? I want to sell the euro. So as far as that goes, we're not going to do anything with this. This just needs to pull back as much as it can and give us some sort of a signal to go short, as it can get as close as it can to that 1.3336 200 exponential moving average would be wonderful. But traders, yes, I want to sell this. I do not want to buy the euro. Let's go over to the pound. My pound's been all over the place, as you can see. This is one ugly chart. However, I thought that was really cool. Look at that candle that actually touched the 200 exponential moving average at 1.6607 and bounced right off it and came all the way back down. Put this trend line here. This is a valid 3-touch trend line. So I'm hoping that this continues its bounce and brings us up close to that 200 exponential moving average, and we're just going to sell this. We'll just take this back down again. If it closes above the 200 exponential moving average by the beginning of London, guess what, traders? We'll buy it. We'll just have to trade what's in front of us with the Great British Pound, because it really is all over the place in the last 2 weeks. All right, let's take a look at the Aussie. The Aussie, as you can see, for the last, well, it looks like good 12 hours also, has been in a range. It's hanging out at resistance. This slide is pretty close to the slide we had yesterday. I just had to refib it a little bit, but pretty much the same. This trend line is a 4-touch trend line. It's a valid trend line. So it's either going to close below the trend line, retest it, and then we can take a sell trade there, or we can wait till this comes down to the 50% Fibonacci, and that's at 93.36 or 93.48, whichever you want to use, and we'll just buy this back up to resistance. Because if you look at the chart, it's giving us higher highs and higher lows, even though, for the last like 3 days it's been in this nasty range. But it is bullish. The bear is definitely bullish. So we just want to take that high. Depending on where your entry is absolutely going to depend on where you place your stop. All right, traders, let's go to one of my favorite pairs that's working out very well, and that is our Euro Aussie. Again, a 60-minute chart. This is basically at support. That's all we can say about this. Not a lot to say. The 200 exponential moving average is at 1.4200, which is a psychological area, so we know if we get back to that price level, we're going to get a reaction. However, I'd like to see a nice fib come back to that 41.25 area, and we can short this. That'd be the minimum I would take on the short. I would not short off that 23.6 fib. It's way too close to support. So it needs to come back up to the 38.2, and we can short this. And there's a good chance that's going to happen, traders, because remember, London's going to come in, and the first thing they're going to do is position squaring. So we might get this sell trade in the beginning of New York or the London lunch, and we could take this pair back down again and close out our day with some profits. Nice way to go into the weekend. Okay, here we are. This is our Euro Yen. This has been a funky pair. It took that big dump to the downside. It has remained below the 200 exponential moving average for quite a while. But as you can see, for the last 2 weeks, it's been at this nasty range. It's hanging out there at that 38.2 Fibonacci level at 136.73, and really hasn't done much. It spiked here and spiked there. But, you know, the trade is now. If you obtained a bearish candlestick formation, this would not be a bad place to take a trade, and just take it all the way down to 136.40 or 136.36 or 35. That's what I would do with that one. But it is bearish, and I'd only be looking to sell this. I wouldn't want to be buying this. It would be nice if we jump up to that 618 fib, right, and then come back down. That would be a sweet trade. Let's see what happens. All right, traders, this is the New Zealand dollar 60-minute chart. This pair has done absolutely nothing this week. In fact, it's been quite boring. But it is below the 200, and it is at a spot where we can take this to the short side. It's not a lot of pips, traders. We're looking at 83.45. So you're looking at like 25, 28 pips in this trade. If you take it at where I marked at 0.8373. However, I'm doing this in Asia, but very early in Asia. I have an appointment this morning, so I needed to get all my work done very early. I was actually up before the sun this morning, getting ready for today and today's presentation. So, yeah, we need to watch this because we have plenty of hours to go before the London Open. Traders, on behalf of myself, William Gilday, and our great friends FXCL Excellence in Trading, I wish you a very, very good, profitable trading day. But please, traders, be cautious. Profit taking, position squaring, all that's going to happen today. And again, traders, remember, we want to trade smart and not hard. And for those in the United States, please enjoy your 3-day weekend, and we will see you on Tuesday. Traders, thanks again. Coming to you live from Pattaya, Thailand with overcast skies. Have a great trading day, and bye for now. See ya.